Hello, everyone, and welcome to the Dollar Auction Show Bear Market Edition with Alex and Shimon. How are you doing, Alex?
I'm doing okay. How are you doing?
I'm doing great. I'm doing really well. I have a few thoughts about the current situation that I would love to hear your reaction to.
Go ahead. I would love to hear your thoughts.
So, first of all, I came back from a conference in New York, which was very good. It was a lot of Wall Street people, and I also met up with a bunch of friends that are like hedge fund guys. And so, yeah, if I had to summarize the sentiment, it would be 50% really positive and 50% really negative for different reasons, and we can get into it. But one thing that really stuck is that the Bitcoin sentiment is really correlated with the tech sentiment. So people who are very, very optimistic about tech, I really enjoyed a guy called Dan Ives. He's been like analyzing Tesla for many, many years, and he's just like a perma bull on technology. And so the people who are very optimistic about tech were also optimistic about Bitcoin. And the people who think that there's huge turmoil coming, specifically in the tech market, there's some people that think there's turmoil coming in the overall markets in general, and we can talk about that. But specifically, people who think tech is really, really kind of overinvested. People spend too much money on hardware. People spend too much money on these models and everything, and look at Apple, they're not spending any money, and they might be able to get like the benefits. So there's a lot of uncertainty on this huge capex that's gone into the market, on whether it will yield actual performance in stocks. And so people who are very negative about tech were also very, very negative about Bitcoin, and they had a bunch of reasons. But I actually have a different take on it. Like, my take on it is pretty unique. What I did here on this chart is I overlaid Bitcoin to QLD, which is leveraged Nasdaq. It's 2x daily Nasdaq. And what you see, something really interesting. So I started in 2018, because if you start earlier, Bitcoin outperforms big time. But if you start at 2018, which is when this chart starts, you can see that basically the blue line, which is Bitcoin, and the red line, which is QLD, they're very, very correlated in tops and bottoms. But the only thing is, in bull markets, you see that Bitcoin outperforms QLD. In bear markets, it underperforms QLD. Okay, so that's insight number one, which is basically Bitcoin is a leverage on top of leverage Nasdaq. It's like 20% more leveraged than leverage Nasdaq. And it's what this chart tells me is that it's pretty much the same investors or the same pool of capital that has like risk appetite, right? They invest in Bitcoin maybe after they're done investing in Nasdaq. And so what you see here is that Bitcoin starts going down before Nasdaq goes down. So if you look at like 2021, the second peak in Bitcoin, it went down, and then Nasdaq went down, and then there was a prolonged bear market, and then what happened is the ETF came. So you see, when the ETF came, which is like a mini bull market, Bitcoin outperformed QLD, then it went back down to QLD, to the correlation. So my base case is that these two things are correlated, and they'll keep being correlated. Then after Trump got elected, we saw a big pump in Bitcoin because of the favorable regulatory environment, and then down for Liberation Day for the tariffs, up again, and then down again. We broke down way, way, way below the leverage Nasdaq. So currently, from 2018, the leverage Nasdaq has given you 533%, and Bitcoin has given you only 383%. So now two questions remain for us to answer: whether Bitcoin will keep going up or whether something structurally has broken. The question is, when in the past has Nasdaq broken down, right? So basically, I don't think that Bitcoin will break down below like this support of like 55 or whatever the key support, or even 60K, unless Nasdaq breaks down big time. And so, yeah, the bears in that conference thought that Nasdaq will break down big time for various reasons, and we can debate that. And I'm happy to have a discussion with you. But I wanted to present picture number two, which is this is the long term trend of QLD. Okay, so in the long-term trend since 2009, we saw that around 2001 there was definitely, we're overshooting the trend, and that was, if you remember, during COVID they lowered rates to zero, so like all the money went into tech. And I remember I was in San Francisco during that time, and people that were doing e-commerce, they were literally saying, holy moly, like every day is like Black Friday now. Like they literally saw huge demand because of the lower interest rates. And then it all came crashing when the Fed started increasing interest rates. Okay, so like the big drawdown that we experienced in Nasdaq and also in Bitcoin was triggered by the increase of interest rates, which then FTX collapsed and all of these other things. So my thesis is that because of the trend line that I showed you, there will not be a long-term correction in the Nasdaq. There might be a short-term wick or whatever, but we're not going to go to a 2022 scenario because I don't think that the new Fed chair will increase interest rates, right? If anything, they will lower interest rates. We can also talk about that. But even if they don't lower or don't increase interest rates, I don't think the Nasdaq is going to break down. And that's just my personal kind of optimism about tech. I've been listening to a lot of Cathie Wood and a lot of her team that break down all of these individual breakthroughs that we're not even seeing yet. And so that's kind of my thesis. My thesis is that Bitcoin will correct upwards to be correlated with the Nasdaq again, and that Nasdaq will not break down. Now, how long this will take, I have no idea. So I worked a bunch with AI to understand different bear market mechanics. Look, bear markets are both price and time, right? So you need to like go down enough in price and then stay there low enough to shake out all the speculative capital. And then once all the speculative capital is shaken out, then every additional dollar of demand drives the price a lot more, and that's what triggers the new bull run. So that's kind of what I think. I basically think that tech won't break down, and because tech won't break down and because interest rates won't increase, Bitcoin will correct upwards back to its correlation with tech, which is a good healthy correction upwards. And I also worked with AI to understand different scenarios, and both Grok Pro and Gemini Pro seem to think that we will be in a bear market until kind of the middle of the year, the first 2 quarters, and then we'll start like an aggressive recovery with a price target of 150,000 by the end of the year. It's interesting that both AIs gave me the same price target, and I'm willing to publicly state those two predictions, that basically 60K was the bottom. That doesn't mean we can't wick to 50, right? But I'm saying we're not going to see a scenario where we go down to 50 and stay there for 6 months. And prediction number two is that the second half of the year will definitely see a very strong recovery in Bitcoin that will match up to tech, which will get us 150K Bitcoin. And that's pretty much it. I wanted to hear what are your thoughts on this?
So you don't think tech will break down in the near term?
Because of the line that I showed you. So when I say breakdown, I'm talking about a 2022 scenario. I'm not talking about COVID or Liberation Day. That those type of things can happen, but I don't see it kind of breaking down and staying down for like a year, which is what happened in 2022. I mean, just look at the chart. I mean, the red line, right? It was I see that I sent it without a timeline, but the red line, which is tech, it peaked in November 2021, then it bottomed in December 2022, and it didn't come back to the peak of November 2021 until May 2024. So it basically took 3 years to recover. I have 99% probability in my mind that there's no scenario in which tech goes down so aggressively from here and then takes 3 years to recover to these levels. And my reason is because, again, if you look at the trend line this time, you see how much over the trend line we were last time that we corrected. So I really think there's a correlation between how much higher do we go above the trend line and then how much lower and how much it takes to recover. And that's true for both Bitcoin and Nasdaq. The only thing is that Bitcoin broke down much more than Nasdaq this time. So it could happen that Bitcoin stays in the 60s for 6 months. I could totally see that happening, but I cannot see Nasdaq correcting by 30% and staying there for 6 months just because of the pure improvements in productivity. You know what? The last thing I'll say is one of the most interesting things that Cathie Wood and her team mentioned is when you have robots that are doing stuff around the house for you, it unlocks GDP that currently hasn't been unlocked, right? So like there's many people that they cannot pay for a house keeper that will constantly pick up things after them, but they will gladly pay 30% of the cost of a housekeeper if a robot does it. So there's this like market. It's almost, if you think about it, it's like minimum wage, right? If the minimum wage is set too high, then the economy doesn't grow as much because you can't hire people that are worth less than minimum wage. So robots are basically humans with a very, 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 very low minimum
So
wage.
what's going to happen to that housekeeper then now that they lose their salary?
Yeah, so that's kind of the whole AI doomerism. Just like you have Bitcoin doomerism, you have a lot of AI doomerism, and homie, just don't play that game. I don't. You can really, really go down some very dark rabbit holes. And what happens if World War III happens, and what happens if quantum breaks Bitcoin, and what happens? Like you can always come up with scenarios. I'm just like, I think what's the most likely scenario? The most likely scenario is that we don't get like this increase in interest rates that causes a breakdown in tech. Also, what I'm hearing from Silicon Valley, from my friends that are working there, is that yeah, like there's not a lot of net new hiring for tech, but there's definitely net new projects that are being launched constantly with the current headcount. So basically, whenever someone leaves a big company, that's when they hire. They don't hire kind of net new people, but they definitely have like net new projects that are delivering a lot of GDP. And robots is only one of them, by the way. So it's like if you think of all the knowledge work that will be unlocked and all of these things, I just think that instead of people losing their jobs, I think they'll just be more productive. Like you can think of the housemaid as maybe, currently, for example, our house cleaners, they come a team of three. So maybe it becomes like one person with two robots, and then that one person just like can handle edge cases as they come. I mean, look, we were in a resort in Mexico now, and they had robots that are semi busboys. So it's like the robot just comes to the table and sits there, and then the busboy loads up the dishes into the robot, and then the robot goes back to the kitchen. Then someone unloads the dishes there. And it's like my kids were running in front of these things. They would stop. Like it's just like, why wouldn't all restaurants have that? And then you basically need less staff per restaurant, but that doesn't mean necessarily that there's going to be less people working in the whole restaurant industry, because like you could see, if prices go down, more people will go out to eat, right? So like it's very hard, I think, to extrapolate like one variable, like what will happen to that housekeeper, and then multiply that by the number of housekeepers, and then say that the GDP will hurt. But I'm very much aware of this narrative, so it's not that it's surprising. I just don't buy into it.
Um, well, I think lots of reactions. One, I hope you're right. I'm a little bit more bearish on the Nasdaq actually breaking down. I think the markets just feel very, very uncertain. For as long as I've been in the market, everything just feels very wonky, and it's very, very hard to put any kind of price. The point of the markets is price discovery, and it's very hard to put a good price on some of these tech and AI stocks and even build outs, because it's like there are a bunch of forces that are playing into it. On one hand, we need more energy. True, we're going to build out. On the other hand, Elon is launching, looking to do power plants in space. So what's going to happen if he does that? Then the energy will come down. Two, three, chips will become more efficient. Four, you'll need less compute per model because models are becoming efficient. So there's a bunch of different forces that are. It's very hard to figure out what the net effect of these forces would be. Some of them are parallel, some are congruent, some are incongruent, and so on and so forth. So it feels uncertain. Plus, the geopolitical realignment feels very uncertain. So there's plus the wars. There's no peacetime dividend. This is a very turbulent decade, as we're coming to find out. Now, when I've been a little bit disappointed with the Bitcoin price action, if I'm honest. We've had two cycles that have been underwhelming, and I think we're going to get a Fed chair in Warsh that he will definitely decrease interest rates, and I think he's all about that. But he will also decrease the Federal Reserve balance sheet. Now he's going to work closely with Besant, so that's good. The Treasury and the Fed will come back to working together, which is they moved away from doing that. So yes, they'll cut rates. It's also been very frustrating that Powell has been so behind the ball. I think both on the increasing interest rates when Biden was president because he wanted to juice Biden's numbers, and now decreasing interest rates because the inflation has been actually fairly low, and especially according to Trueflation. So I don't know. I don't have a very good thesis. I still think that over the long term, Bitcoin goes up a lot, but maybe I've had a different thought. I've had a like in every epoch of Bitcoin, 2017, at least the ones I've participated in, 2017, 21. Now there's different levels of FUD. In the bear market, you typically see and feel a lot of FUD. We're seeing a lot of FUD now. Anything from the stupidity of Epstein, so somehow Bitcoin is associated to Epstein, to some crypto firms blowing up, to something broke with Binance on October 5th, to quantum computing risk, to everything is going up, but Bitcoin is going down. Is it the canary in the coal mine, or is it now finally decoupled and it won't perform? Um, it's just the level of FUD is becoming much bigger. So a lot of the FUD that I'm seeing that's actually I think has real credence to it is we have a pro crypto president, pro Bitcoin president, we have a pro Bitcoin Congress, we have all of the things that we wanted, and it's still not performing. So it's kind of like buy the rumor, sell the news. Well, we've gotten to the news and we're selling it. Um, I do intend to still think that Bitcoin is a leading indicator that Nasdaq will come down. I think there's been maybe a gigantic build out of these AI and data centers, although it doesn't seem like it's stopping. I think we're going to see a major realignment of valuations in the AI space. So, for example, people are chasing OpenAI at these crazy valuations. I actually think that the the main models, while they're a good funnel for consumers, they're fairly commoditized or will be commoditized in the long run. And I think a lot of the AI value will inevitably have to fall into the like once AI comes into recursive loops, it's just going to be whichever better AI is going to win. So it's use cases and applications for who's going to pay for specialized AI plus robotics. I think robotics is where it's going to be. The money's going to flow, and then that becomes commoditized. So I don't know, people buying into OpenAI, these crazy valuations, I think they're going to lose all their money. But I could be very wrong.
No, I
Um,
don't disagree with you. I don't disagree with you on a specific company. I'm only talking about the
yeah,
sector as a whole.
yeah. Look, the Nasdaq. The question is that will it flow through the Nasdaq, or will it be a bunch of little startups that aren't going to be public at all? Theoretically, it
No,
flows through.
sorry, that I don't buy because if you look at the Mag 7, they're pretty much machines for buying startups. So even if uh, a lot of the value is accrued to startups, at the end of the day, it will roll up to the publicly traded companies. That's happened every cycle.
I mean, look, that's fair. The other question is why isn't Apple going crazy and investing in capex like everyone else? Apple's the only one that's not going capex crazy.
Well, I think that they're actually a very good strategy for them because, like, if you and I put our strategy hats from BCG, right? Like, if we were to consult to Apple, you see this crazy arms race going on here, and you could say to Apple, "Look, it essential." The question is that the models that will sit locally, how good will they be for the needs of an average day-to-day user? Especially when they can ping outside when necessary, right? So you can tell like your open claw or whatever those things of the future will be, right? You can say, book me a restaurant. I don't know. I'm going to a new city. Book me a restaurant. So like what you could do is like the model can go to a OpenAI or to Gemini or whatever, ping them once with like give me a list of the restaurants with their phone numbers, the best ones, but then it can do everything else like initiate a call, simulate a voice, or like go to the API of OpenTable and book so the simple things can be done at the edge, and then the more sophisticated things that really need the huge models that are trained. I mean, all of that training basically does two things for you, right? One is it allows you to answer like really, 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 really complicated questions, like all the scientific questions or whatever. I don't know how much the end point users need that, right? And then the second thing is like just synthesizing huge, huge, huge amounts of data into like something that's presentable, that's better than, like, let's say Google Maps or whatever. So like, yeah, you could maybe do a ping to synthesize the list of restaurants, which is a hard problem. But then to do all the back and forth, the emails, the booking, the charging the credit card, cancel, all of that can be done maybe at the edge.
So you're saying people are going to run local models, but the thing is, one, he has to get there. Two, Apple needs to be the form factor. We don't know that that's going to be the form factor. Three, is Apple Siri. And by the way, as Amazon's AI is absolutely terrible
Hmm.
compared to what's happening now. You can't talk to Siri the way you can talk to ChatGPT or Grok or Gemini and Claude. You just can't. I don't know if it's necessarily a winning strategy for them. I have a feeling they're going to get that they're going to be. Look, I have scars from Microsoft where Microsoft was completely locked out of the mobile ecosystem, and that was a decade long, loss. You were behind by many years. So I don't know if it's necessarily a winning strategy for Apple. I wouldn't. They missed since Jobs. They've missed a whole bunch of major plays. I mean, it's just been iterating on the iPhone essentially.
And look, I'm not optimistic about Apple specifically. I just said that I think that that strategy may make sense for them, given the fact that everybody else is investing in such a commoditized thing. To tell you the truth, I'm really shocked with Gemini how good it is. Like I did this, just like, there's this thing on Bitcoin called the power law, and it's like a model for the Bitcoin price. And so I was like, with Grok Pro, I was telling it, okay, get me the power. Now this is public information, so the power law, literally people have published Google Sheets and GitHubs with the projections. It's one formula, so it's not hard, it's not proprietary. I was like, give me the historical Bitcoin prices and build the power law. I want like a Google Sheet that gives me the bands, and it just couldn't do it. It was like, I can't get Bitcoin prices, go here, download it here, upload the CSV, whatever. Like, it was like impossible to do. And then with Gemini, they're like, here you go, and it just worked. And it's like, oh, by the way, do you want to copy this into Google Sheets? Click here, we'll create a new Google Sheet with this information. And they're not using GPUs. So like, there's basically two things. There's like, do you invest in GPUs and then train your models based on that, which is what Elon Musk and OpenAI are doing, or do you do your own thing with your own data and your own, I forget the Google like type of microprocessors they're working with, but it's different and it actually yields good results. So I think that's actually very bullish for the industry, the fact that we have two competing paradigms. It's almost like iPhone versus Android, right? And then you'll have like different endpoints, different middle layers of the software. I agree with you that it's not necessarily that Apple will win, but I'm just saying, overall tech, can we have a short correction dip? Like, I don't know, if they bomb Iran now, could tech go down by 20% for sure? But like, is it something that won't recover? Like Liberation Day we could have, but like 2022, I don't think we could have because of
Look,
the interest rates.
look, the other thing is Warsh and all these guys. I don't think they're going to necessarily prop up the market. Although Trump is going to have to prop up the market towards going into the midterm. So yeah, probably summer, late summer, he's going to want to start juicing things so that it feels good, going into the voting. Um, but I don't know. There's a bunch of factors at play. The one question about your chart is that why did you do QLD and why not QQQ?
Just because it aligns perfectly. If you do QQQ, then it overshoots it a lot in bull markets and undershoots it a lot in bear markets. But it's the same, right? They're just 2x from one another. So like, it's a easy math transformation from one to the other. The chart will look the same. It's just the difference between the two charts that will look different. But my point is, this line for QQQ still holds, right? I can build the same line with QQQ, and I'll show it here to the viewers. My point is that technology is such a strong force. I don't even think that who is at the helm of the Federal Reserve matters long term. It matters short term tremendously, but like long term, yeah, you can't keep interest rates much different than the actual inflation whether it's higher or lower than the actual inflation, because otherwise you just like go bankrupt as a central bank, as a government, right? Like if you pay like 4% and inflation is at 0.5%, where's the money coming from? You have to like, because like basically you get your revenues based on capital gains and income taxes, which are a function of inflation, right? So if inflation is at 9%, then you get like more tax revenue than if inflation is at 0.5%, because it's nominal, right? So like where will the money come from at 0.5% inflation, for you to pay out 4%? Like it just doesn't work out mathematically, not to talk about the past debt that you have. Like I'm just talking about future debt, but like the past debt. And look, the techno optimists, I think they have a really good case, which is like every time that technology has come online, it unlocked GDP. It didn't just like make things a little
Yeah.
bit more efficient. It unlocked a tremendous amount of GDP. And yeah, could we be too early? In the sense that they price it as if it came, but it's going to take 2 more years to come. Yes, but I don't think we're that much too early. Seeing the progress in like robotics and all of these things, and especially stuff coming out of China, like Bitcoin is like a global asset. So that's the other thing. It's like it's not just the monetary policy of the US and the US industry. It's the global economy and the global monetary policy. So I think globally we have so much debt, right? So we need to keep interest rates low. Globally, we have productivity, so like we don't have too much inflation globally. Last time I checked, like if you do it weight adjusted. So yeah, I'm optimistic. Now that being said, I did sell a bunch of tech stocks in order to cover my loan that I had against Bitcoin. So I'm not saying that you can't rebalance or do things that are tactical, but I'm just talking about long term. Because like if you were to listen to the bears, first of all, what's really interesting, do you remember the FUD dice from 2017 that someone made?
I do.
The same arguments, but they're just repackaged. So, okay, instead of Satoshi coming online and selling his coins, now it's like Quantum coming online and selling Satoshi's coins. Instead of miners capitulating because the price is low and it's not profitable, it's like miners capitulating because they're moving to AI. Instead of like retail losing interest because like NFTs are not interesting anymore, now it's like retail losing interest for prediction markets, in favor of prediction markets. So they just rehash the same argument with a different kind of rationalization
And
that's
the
like
more
more
mature rationalization, more and more with a more mature rationalization. By the
with
way,
a more current, yeah, with a more current rationalization.
well, current and I think bigger. So I do believe this is why I still believe. I don't know if it's a 4 year cycle, but the Bitcoin up and downs. When you and I talked a lot about booms and busts. I think every new cohort that comes in needs to go through this and feel the up and then feel the down. We just haven't had a lot of ups. But now it's the institutional guys, right? The real traders that they're gonna be, oh, Bitcoin won't go up, oh, this and that, oh, it's tech related. Now it will go up and they'll come back in. It just might take longer. I'm just nervous that it's gonna take longer. I'm nervous that this grind is gonna be, I don't know. I'm just nervous it's gonna be a grind, which sucks because
A
there's
grind
probably
until when? Let's talk to me numbers. Like, where do you think the Nasdaq will be at the end of the year, and where do you think Bitcoin will be, at the end of the year in 2 years?
I don't know. Listen, I thought it was going to be too close to 200 by the end of last year, and I was very wrong. I thought there's no way we're going to top out at 126. Although technically speaking, looking at the technicals, we had major bearish divergence. I know you and I argue about technicals and TA, but on the RSI, we had major bearish divergence for months going in at like 100 and 110 and 126. So it was just a matter of time. It was musical chairs.
Mm-hmm.
Um, I don't know. I'll take 150. Now, you said it's interesting that both said 150. I don't think it's that interesting because they're looking at the same
Yeah, yeah,
pool of data,
for sure.
So, um,
But what do you think
look,
about, like, do you think it will happen, or do you think we'll stay in the 60s for like a year and a half now, or go to 40 and stay there for a year and a half? Like,
listen, I can see us going, I can see us staying in the 60s. I think Max Payne will be staying in the 60s for a year and a half. I
mhm.
mean, people would just lose their minds.
And do you think that's gonna happen?
I would say no, but now looking at I had this bad feeling of looking at crypto Twitter and other things of just like everybody's saying power law, everybody's saying this, and it always goes against what everyone's saying. And crypto Twitter is big enough too to kind of matter. Well, it doesn't. Twitter doesn't represent the world. We talked about this, but it represents it enough. I don't know. I don't have a good answer for you. I think again in the long term, but the long term could be we could have 3 or 4, 5 or 6 years of shit. That would be just absolutely terrible. It will shake everyone out, until the real kind of RAs or people start allocating a small weight. Now, all the underlying stuff is majorly bullish. This is why I don't get the price action feels very, very wrong compared to what's actually happening underneath. But we do know there's no retail at all. We do know people are strapped for cash and spending. Let's see what happens with Trump's tax cuts. Right,
Yeah.
this big beautiful bill during at tax day. People get more disposable income. Can things come in? Yeah.
So I think that there's zero chance that Bitcoin stays at 60 for 3 years. Zero chance, because we've never had a bear market of like 3 years that stays at the level of like the previous all-time high.
Yeah.
We've never had. If you think about it, the all-time high, let's say in 2017 was like whatever 13, 14K, like the kind of stable one, and then we retested 16K, but we stayed there for a few months, and that was under very, very low, again, interest rates, fastest hike in history, and there was just a lot of turmoil, banks going under, all of that stuff. So yeah, I don't think we could stay in the 60s for 3 years. I think we could stay in the 60s for like till the end of the year or a few months. Anecdotally, first of all, nobody's talking about the power law. I have to say, you say that everybody's talking about the power law, maybe the people you follow on Twitter. But the power law is like a very esoteric thing with the main kind of Wall Street people and the people who allocate capital. They don't like, you know. And then if you look at the bottom of the power law that has never been broken, here I projected it, right? So currently we're at around 50K, right? That's supposed to be the bottom that never breaks. By the end of the year, we're at 66K. Okay. But by the end of next year, we're already at 90K. So that's the absolute bottom that has never been broken. And I listen a lot to these power law guys. I read the book that it's based on. There's a reason why this base doesn't break. So it's not just like an arbitrary line in
Which
the
is
chart.
what.
The reason is that that's the adoption, right? That's the minimum rate of adoption of actual money going into Bitcoin, not for speculation reasons, but for actual long-term investment reasons, right? So that's the bottom. The bottom is like people that will buy no matter what at this price. They have like money set aside, and they're like, if it hits this price, I'm going to buy no matter what, in infinite amounts, like compared to the selling pressure, right? So you also have to think about, if like after the capitulation, right? How many people are left that are still willing to sell? Because like if you didn't have a lot and you still are holding, then selling won't make a big difference for you. And if you had a lot, you probably sold already. If you had a lot and lost conviction, you probably sold already. So like how many people are left at 67K, right? That still have a big chunk, and they're like, oh no, if it goes to 55, I'm going to dump it all. I don't think too many of these people exist.
So, what do you think is going to happen? What's going to be the price by the end of the year?
I think I'm gonna go with the AI. So I think we can stay in the 60s for like a few months, a few good months. And I don't have the Grok here with me to bring up, but I'm pretty kind of yeah, like we stay there for a while, and then after the Fed chair gets nominated, the other thing I heard of is like every Fed chair that gets nominated, they go through like some kind of market trial. So like the market dumps, and then they want to see how the Fed chair reacts, right? So like he'll come in his confirmation hearings, he'll say something, but then the market will actually want to see, okay, what will actually happen, right? What will actually happen? And so like, he lowers interest rates and everything is okay. Now look, Arthur Hayes came out with a piece that's pretty much like the opposite of what I'm saying. He says like tech is going to crash, stocks are going to crash like crazy, and then they're going to print a lot of money, and then Bitcoin's going to the moon. So like, okay, even if that happens, that's kind of my scenario of like the short-term crash. Nobody says tech is going to crash and stay there. I haven't heard one person that says tech is going to crash by 30% and never recover.
Yeah.
The only question is like, when will it recover? How much was the overinvestment in data centers, right? Like the questions are about magnitude and about duration. They're not about like when tech will be higher. And then maybe another way to think about it is this way. At some point, the Nasdaq will make all-time highs again. It can take 2 years. It's not going to take like 10 years, like in the dot-com boom, I think. That's again a personal bet that I'm making. But I really think that then the overinvestment was way, way, way higher. So it'll go back to all-time high, and then once Nasdaq starts breaking all-time highs, I'm pretty sure that Bitcoin will start breaking all-time highs too. And so like, yeah, I think it could happen by the end of the year. It could happen mid next year, right? So I'm not saying that we have to get to an all-time high by the end of the year. I think it's like let's say 50% that we get an all-time high by the end of the year, 50% that we end the year at like between 80 and 90, and then we hit all-time high the next year. That's my prediction.
I think both cases, given where we are now, would be good. Although all time high this year will be much better. Captain Obvious over here. Um, when do you think we're going to return to solid cycles? Because the cycles have been pretty shit. The last two cycles have been just very underwhelming.
That's very hard to tell. I don't know. I mean, the power law doesn't say anything about cycles. I always said that their theory about cycles is not based on any statistics. The bands I really believe in because that's the adoption. But yeah, I have no idea. It really depends on policy decisions. It really depends on, the whole war situation. I mean, here's a scenario where we can actually break to all-time highs on everything, right? The war in Ukraine stops. They reach some deal with Iran. Warsh enters and lowers interest rates. Everybody else follows and lowers interest rates as well.
Yeah.
And the major investments in tech are yielding actual GDP growth, right? How unlikely is that? I don't know, 25% maybe likely.
A global peace dividend back again would be really, really nice.
Yeah,
Would be really, really nice. I thought the war in Ukraine would be over by now, but here we go. We keep on going.
I know. It's terrible.
It's terrible on so many levels, but yeah.
And the same thing with Iran. It's like they have everything to lose and nothing to gain, but they're just like being hardliners. But anyway, we'll see. We'll see what happens. But I'm just optimistic on tech in general. Like, forget about stocks. I really think good things are happening. Like the people who think that AI will ruin jobs and stuff remind me of the people who are against, electricity and saying it's dangerous. It's true. You have these people that are basically always resisting change. But I just had a test. I have a Tesla, and in
Yeah.
self-driving mode, I had a car accident where someone rear-ended me. It reacted really fast, the self-driving, so it wasn't my liability, right? And then now I just got the car back from the shop. It was a $10,000 repair
Wow.
that I didn't have to pay because of self-driving. So like, it works in my life. I'm putting my children's life in the hands of this technology, and then people are saying it's not going to yield GDP. Like, how do those two things?
Well, GDP will yield. It will just the velocity of goods and trade will become bigger.
Well, I'm
Instead
talking of
of
net GDP growth, net. So you have gains, you have
well,
losses on net. I think
no,
it's great. It's good.
I
It's
agree.
gonna grow the economy.
I agree. I agree. By the way, there was a news article that came out, rumors obviously, but that the Trump administration is preparing for a major war with Iran. It will
Yeah, I
consist of
see. I see
weeks long
all.
campaign by Israel and the U.S. that will look like more like a full fledged war than last month's pinpoint operation in Venezuela. That would tank the markets.
Yeah, I know. Last time we attacked Iran, Bitcoin went from 120 to like 99. So maybe that's the other thing.
Yeah.
People are just being a little bit more cautious with all this stuff. I mean, in many ways, I'm kind of disappointed by like the administration, but I guess the problem is you can't, even if you have the best of intentions, you have so many like entrenched power brokers that push you to do certain things. But like, I don't know, hopefully in one sense it's hard to complain with all-time highs on stocks, but then on the other hand I'm like, everything could be so much better if we just had sensible policy and no like shenanigans. But who knows? Like,
Well,
okay, how high do you think Bitcoin would have gone if we didn't go through Liberation Day and all the tariff stuff? Then we could have hit
for
250K.
sure.
Like that was a major blow, not just on Bitcoin. It was a major blow for everything. I remember Mohammed Valerian talking on MSNBC, like, "Oh, like this is unprecedented. It's not good. It's just not good."
Yeah, I mean, Liberation Day and the tariffs and all that. I mean, maybe he did it uh, um, for whatever, for the U.S. or because he believes it's the right thing, and I think geopolitically it is. Man, had it been Democrats or Kamala, in retrospect, we talked about this. Like, man, and had Kamala gone in, it would have tanked and then increased because they would have just pumped the markets full of money. It would have been the same old stuff, kicking the can down the road. At some point, that you got to pay the piper. We're paying the piper. And it's I don't know. It sucks. It's painful.
Yep.
But maybe if Democrats came up, it would have been, yeah, it would have they would have pumped the market, would have pumped Bitcoin. It would have been high.
So yeah, a couple of other things that I wanted to just mention to bust some FUD because I want to put it on the record. Like the whole idea of miners capitulating, it's just like false. Just like look at the hash rate. I'm looking right now at the hash rate, and
Yeah,
I'll show this to our. Oh wait, this is only from March, but still, it's pretty it's pretty high. It's pretty close to the all-time high. So like what are all these miners that are capitulating? Yeah, you can always like quote a few. Yeah, there was a big capitulation here I see around, end of January. But then we recovered now to 120 what is this? 1 billion terahash per second, which was basically 2025 levels. So what capitulation? People are just like saying things. The same thing people say, oh, like a midterm year is like bad for stocks. Like any midterm year election is bad for stocks. No, it's not bad for tech stocks. I pulled the data, I shared it with you. It's sometimes it's bad, sometimes it's good. It's like 50-50. A year after midterm elections is usually very strong for stocks. So that's another data point for us, because like it's gonna be gridlock. If the Democrats win, it's gonna be gridlock, and then people are like, okay, the government can't do too many stupid things, at least for a while. So yeah, I think the big advice I have for people is please don't use leverage, in the sense that if you have to sell at the bottom, it's like very, very painful. I actually had a personal victory story, which is I chickened out on Liberation Day and I sold a Bitcoin and a half when it was like 76K. And now I rebought more than a Bitcoin and a half
nice.
at like 69K. So I'm still losing money on that position since I opened it, but I think long term it will work very well for me. And that's why it's important to have cash, to have like some liquid part of the portfolio, because then, if big moves happen, you can move on it. For example, I shouldn't have taken that loan. I basically, what happened is all of 2025, instead of selling Bitcoin, I was borrowing against it to fund expenses that I had. Had I not done that, it would be a much better outcome for me.
Mhm.
If I just sold every month to cover my expenses, that would have been the optimal strategy. But again, that's in retrospect. Hopefully, the power of diversification. I didn't sell Bitcoin to pay back the loans. I sold tech stocks to pay back the Bitcoin loans. So hopefully, that's another thing. The uncorrelated asset, that doesn't necessarily mean that uncorrelated on the downside it's bad. Remember, you and I were speaking about it, and we're like, haha, we hope that it would be uncorrelated to the upside, where stocks would be flat and Bitcoin will go up. That sometimes happens, like in 2021 or 2020. But like on the downside, when it's not correlated, that's also a big advantage, because then you can dollar cost average. Let's say you want an X percentage in Bitcoin and Y percentage in tech. If it's uncorrelated, you're actually getting a better return, even if just like Bitcoin keeps breaking to the downside and never breaks to the upside versus tech. So that's one thing I want to tell people. Like my big learning from this year, 2025, 2026, not to have too much money in one asset, right? Like I think my Bitcoin position grew to be like a very, very significant position in my portfolio, because I've been doing this for a while, and that's not healthy. I think I'll basically cap it at like 40% or 30%, and then it feels so much better to have, let's say, 30% Bitcoin, 30% leverage Nasdaq, and 30% cash. and just keep
You're
the
gonna go 30% cash.
no, no, I'm not saying that's what I'm going to do,
No.
but I'm just saying having a diversified portfolio is much, much better psychologically and also probably return wise than betting really, really huge amounts of the portfolio on one asset.
Well, I've definitely learned that I need to have much, much more in cash, just for the peace of mind, because constantly, and I thought I'll be okay, and then I'm looking at taxes now for this year. I'm like, shit, I'm not going to be okay. It's just constant search of liquidity. I don't want to do this again. So and now it's digging out of this position, but having cash and having some cash on the side, important,
Yeah.
definitely important. Well, let's see how it goes. Let's keep on looking at your chart. It'll be interesting. Like I still think we're a few months away from some formidable bottom, but I hope I'm wrong. Again, I hope it just comes and goes. But for it to come and go, we only had a V-shaped recovery, I think, once during COVID. We just printed a lot of money.
Yeah, I
Most of the
don't think
times,
it's
it's
going to
like a slow
happen.
bleed.
Yeah, I don't think it's going to happen this time because I listened to Mark Yusko and he said something really a cool analogy, which is like in bear markets, the snake just has to get through the pipe. So if you think of the price chart as a
I
snake
like that.
in a pipe, and then it gets out, and so
Freedom.
I really think I just want to say at the end of the day, what makes Bitcoin so hard to hold, and this is why we're rewarded on the way up, is that it's completely speculative in the sense that in a company you also have risk, right? Like let's say you have like some company that makes cars or that makes like computers or something, you always have a risk of someone else coming and just taking their market share. But with Bitcoin there's no company, so it's just pure sentiment.
Yeah,
And even though it's like such a much better technology, the awareness of how good the technology is not guaranteed, and it's not the speed of it is not guaranteed. And yeah, I just think that eventually all better technologies and
better
there's
technology will win.
nothing better than Bitcoin. So it's like if you could make an altcoin that's better than Bitcoin, I would be very worried. But like you cannot because of the network effect of all the energy that's spent on it. I just think that it's like a protocol that is just growing and growing and growing. And yeah, it might take time. You know what someone told me about the internet, which is like it technically started like in the late 80s, but the government actually started working on it in the 60s. And then in the 70s, it opened to universities. And then in the late 80s, it finally opened up for consumers,
Yeah,
but it was the same protocol from the 60s. So
yeah,
if you think about it, the boom came 30 years after the protocol was like invented, right? So like 2039, right? If 2009 is when Bitcoin was invented, we could see $1 million Bitcoin by 2039 or $2 million. And that would be very much in line with other technologies from the moment they're invented until they're fully commercialized. So yeah, patience is very, very important. And if we finish the year at 90 and then finish next year at 100 and we finish the next year at 150, that would still be a great outcome.
I agree.
It'll be a great outcome
But it's a
because then we
slog
can
until
keep
then.
going up. Yeah.
It's a slog until then.
A slog until then, my friend. Any other closing words?
Slog until then is the best closing word of the times.
Yes. Well, let's keep slogging. And yeah, please like, subscribe, and leave us comments. It really helps with the algorithm.
Thank you, Shimon.
Next time. Thank you. Bye.